Imagine stepping into the future, okay? A future where you're looking forward to retirement.
Mm-hmm.
What does that picture look like for you? For millions of Americans, a huge part of that vision is tied up in their 401k.
Absolutely central, yeah.
And when we talk about the scale, I mean, it's an absolutely staggering number. Americans' 401ks altogether, around $10 trillion.
10 trillion. It's hard to even visualize.
Just take a moment to let that sink in. That immense pool of money. It's the bedrock for so many financial futures.
It really is.
Now, it's a colossal pool of money, right? Representing all these retirement dreams. It's now right at the epicenter of a pretty significant shift, a big change that's unfolding fast.
Okay.
And this shift, it was really kicked off by a recent executive order. So what if your retirement savings, that nest egg you're carefully building, could soon hold things like, well, Bitcoin or maybe direct real estate, even private equity, stuff that wasn't usually in the mix?
That's exactly where we're headed today. Our mission in this deep dive is really to explore the core bits of President Donald Trump's executive order that came out August 7th, 2025.
Right.
And it's designed essentially to loosen up those long-standing rules about what you can hold in retirement accounts.
Okay.
So we're here to pull out the most important pieces of info, the key insights from our sources, to help you really understand what this might mean for your financial future and, the whole retirement planning landscape in the U.S.
Think of this as your shortcut, your express lane, to getting properly informed on something that could genuinely impact millions of people,
Yeah.
possibly including you.
Exactly.
And hey, if you find this deep dive useful, please do consider liking the episode, subscribing to the deep dive. It really helps us out. And maybe drop a comment below with topics you want us to tackle next.
We appreciate the support.
Definitely.
Yeah.
So, okay, let's really dig into this then. Why all of a sudden intense focus on your 401k money? What makes this $10 trillion pot so compelling?
Well, the why really comes down to the sheer size and, frankly, the financial allure. That $10 trillion isn't just big, it's a massive concentration of capital.
Right.
To give you some perspective, it's roughly like 10% of all the publicly listed stocks and bonds in the whole U.S. market.
Wow. Okay.
And another way to think about it, it's almost double what the federal government spends in an entire year.
Double the federal budget. That's huge.
It is. So for asset managers, financial advisors, whole industries, really, this largely passive pension money, as the source calls it, is incredibly desirable.
Passive money. Meaning people aren't actively trading it day to day.
Exactly. It's a vast, pretty stable pool of capital that just keeps flowing in, often without active decisions from the individual account holders. That makes it a prime target if you're looking to manage or deploy large sums long term.
Okay, so it's this giant flowing river of cash.
Yeah.
And then August 7th, 2025, President Trump issues this executive order.
Right.
And the order is aimed squarely at making it easier to allow, and I'm quoting here, private equity, real estate, cryptocurrency, and other alternative assets in 401ks.
That's the core of it.
Which means for, something like 80 million Americans holding these non-traditional, non-standard assets in their tax-deferred plans might get a lot simpler.
That's the potential outcome, yeah. And maybe just a quick refresher for anyone less familiar with the nuts and bolts.
No idea.
A 401k is, at its heart, a tax-deferred retirement account.
Wow.
You put in part of your wages before tax, maybe get an employer match.
Right, the match is key.
Very key. And that money goes into assets you choose. Traditionally, that's been, mutual funds, broad stock market ETFs, maybe some bond portfolios.
The usual suspects.
Exactly. And this whole setup has been governed by the Department of Labor, interpreting the Employee Retirement Income Security Act of 1974, ERISA.
ERISA, right. Heard of that.
So now, the Department of Labor has been specifically told by this executive order to update its guidance, to broaden the scope of what counts as appropriate investment access for these ERISA accounts.
That feels like a really crucial point, because for decades, the Department of Labor, guided by ERISA's prudence standard, right, they've mostly favored really regulated, liquid, easy-to-value assets.
That's been the historical stance, yes, to protect investors.
To protect the average person from too much risk. So the question then is, if these other assets, like Bitcoin, have shown such, amazing performance, and big institutions are already using them, why were they kept out of 401ks for so long? What was the blockage?
That's a great question. It really hits the core of the regulatory thinking around retirement savings. Historically, like you said, that ERISA fiduciary duty, the prudent standard, was interpreted very conservatively.
Okay.
Plan fiduciaries, the people managing your 401k options, have a legal duty to act in your best interests. And for a long time, that meant avoiding things seen as too speculative.
Like Bitcoin.
Exactly. Bitcoin, with its volatility and, still developing regulations, seemed too risky. Private equity. It's illiquid, hard to value daily for retirement accounts.
Right. You can't just sell it instantly.
Precisely. And real estate, beyond those publicly traded REITs, also has management and ownership complexities. The view was too risky, too complex for the average 401k saver. The DOL was the gatekeeper.
So this executive order is basically saying, hey, maybe rethink that, reevaluate what's prudent now.
That's essentially the push, yes. Challenging that long-held interpretation in light of today's financial world.
Okay, that makes a lot of sense.
Yeah.
So for you, the saver, looking ahead, this could mean new options, maybe less restrictive ones, beyond just the standard stocks and bonds menu.
Potentially, yes.
Which brings us to the really juicy part. Why these specific assets, especially Bitcoin? Why are they being pushed into the retirement spotlight now? Is it just hype, or is there a solid financial reason?
Oh, it's definitely more than just hype. It's really tied to the search for better performance in what's often a tough investment climate, looking for higher returns.
Exactly. When you look at the numbers, Bitcoin, alongside, say, well-chosen real estate like REITs and private equity they have, demonstrably outperformed the S&P 500 recently.
Okay, give us the Bitcoin numbers.
Right, so get this. Fidelity started a sort of pilot program, letting some 401ks hold Bitcoin just over 3 years ago. Since then, Bitcoin's return is around 215%.
215%.
Yep. Compare that to the S&P 500, the broad U.S. market benchmark over the same period, about 54%.
Okay, huge difference.
Massive. And even those big tech stocks, the Magnificent Seven, Apple, Amazon, Google, Microsoft, they're up maybe 150% in that time. Bitcoin's performance really stands out.
And the sources suggest this isn't just a flash in the pan, right? It's not a short-term thing.
That's what's compelling. The longer the time frame you look at, the better Bitcoin tends to rank. One source actually calls it the best performing asset in the world over almost any time period.
Wow. That's quite a statement for retirement planning, which is all about the long haul. It really is. It suggests maybe a fundamental change in what we consider a high-return, long-term hold.
And it's not just talk. Institutions have been doing this.
Yeah. What's fascinating is that sophisticated, established players saw this potential years ago, way before it became a political thing for 401k.
Like who?
Well, major university endowments, think Brown, Emory, Harvard, University of Austin, they quietly added Bitcoin to their huge portfolios.
University endowments.
Yeah.
They manage massive amounts of money long term.
Exactly. These aren't day traders. They're professionals managing wealth for generations. And others, like UPenn and UC Berkeley, they've accepted and managed big Bitcoin donations too. Their willingness to bring Bitcoin into their diversified endowments, it says a lot about how they see its long-term value, maybe as a growth driver or even an inflation hedge.
That institutional backing does add some weight.
Okay.
But let's shift gears. We have to talk about the controversies, the skepticism around this order.
Absolutely. You can't avoid it.
Anytime you tinker with retirement savings, especially involving President Trump and crypto, there are going to be critics. And strong ones.
You're right. And it's reasonable to be skeptical, frankly, particularly given some past actions. Our sources do point out concerns about potential self-enrichment.
Like what specifically?
Well, they mention things like the Trump and Melania meme coins launched just before his inauguration.
Right, I remember hearing about those.
And the Trump family's connection to a firm called World Liberty Financial. Critics, according to the sources, see these as raising flags about potential conflicts of interest, maybe profiting from influence with little oversight.
Okay.
The critical take is basically that the whole idea smells like yet more insider dealing and maybe offloading risky assets onto regular folks, shifting risk to the public.
That's a serious charge. Insider dealing, pushing risk onto savers. But the same source, confusingly maybe, also calls the order a clever proposal.
Yeah.
How does that square?
It's a bit of a paradox, isn't it? The argument there is that, look, many Americans are facing uncertain retirement prospects.
That's true for a lot of people.
Yeah, current savings are often too small. People are struggling with costs, healthcare, living longer. You know the drill. So from that angle, giving people access to assets with potentially higher returns, even if they are riskier, is framed as one way out of this conundrum.
So it's like, give people the tools, even risky
Yeah.
ones, because the alternative is falling short.
That seems to be the logic presented, empowering individuals with more aggressive options because traditional safe bets might not cut it anymore.
Interesting framing.
And this leads to maybe one of the most insightful points from the source. Retirement money is kind of passively finding its way into Bitcoin anyway.
How so? Even if I can't choose Bitcoin in my 401k?
Yeah, through indirect exposure. Think about it. Tesla. They've held Bitcoin on their books since 2021, right?
Right.
And Tesla is in the S&P 500 index. So if your 401k has an S&P 500 index, so if your 401k has an S&P 500 fund.
I indirectly own a tiny slice of Tesla's Bitcoin.
Exactly. And more recently, Coinbase, the big crypto exchange, they committed to buying more Bitcoin A&D. They joined the S&P 500 in May.
Okay, another one.
Then there's Block, Square, Cash App. They're the 12th largest corporate Bitcoin holder, joined the S&P 500 last month.
Wow, it's adding up.
And the big one, MicroStrategy, Michael Saylor's company. They're the biggest corporate holder by far. Their whole business model is basically using financial markets to buy more Bitcoin. They're very likely joining the S&P 500 soon, too.
So what you're saying is, like it or not, Bitcoin is already filtering into the financial system, into the very index funds many 401ks hold.
That's the argument. It's becoming baked into the landscape.
So this executive order, in that light, is maybe less revolutionary and more about just cutting out the middleman, giving direct access instead of only indirect.
That's one way to look at it, yeah. It strips out the middleman for direct access if you want it.
But there's a difference between that indirect diversified exposure through an index fund and choosing to put, say, 5% of your 401k directly into Bitcoin.
A huge difference. Indirect exposure spreads the risk. It's part of a much larger company's value. You don't control the allocation.
Right.
Direct access, which this order could enable,
Yeah.
that gives you control. You decide how much, if any, maybe avoid some fees.
But all the risk and volatility lands squarely on you.
Exactly. The full weight of doing your homework, understanding the unique risks of crypto especially, that's a new world for many retirement savers.
Okay, so we've done a real deep dive here. We looked at the executive order, the huge $10 trillion 401k pool, the performance arguments for assets like Bitcoin, and the controversies and this whole passive flow idea.
A lot to unpack.
Definitely.
Right.
A complex, fast-moving picture, all tied directly to your financial future.
And, knowledge is great, but it's most valuable when you can actually apply it to your own life, your own situation.
Right.
This order, it really is a big shift. It offers potential new opportunities, but also raises some serious questions for anyone planning for retirement. It's about more choice, sure, but also navigating those choices carefully.
So here's something to really chew on, a final thought for you listening. If big companies holding Bitcoin are already in the S&P 500, meaning your standard 401k, might already have some indirect Bitcoin exposure. What does this executive order truly change for you? Does it really empower you with meaningful new choices and direct control? Or does it just add complexity, maybe even new risks, to a retirement system that's always prioritized stability, for better or worse?
That's the core question, isn't it?
Think about what this evolving landscape means for retirement planning overall, and yeah, most importantly, for your own investment strategy. What makes sense for you? Don't forget to like, subscribe, hit that notification bell for more deep dives.
And let us know in the comments what you think and what else you'd like us to cover.
We'd love to hear from you.